Hello and good morning, folks. We are back for you with another round of updates, and it's the ECB meeting day today. And we're going to speak on those fronts at Almus Market Mornings, your daily dose of global financial updates with me, Shikhar Garg. Now, the financial markets are keenly waiting for the updates from the ECB on the interest rate side as they are anticipating a 50 basis hike, just as many working class people wait for the weekend only to realize that it was there only for a snap. So JK, what do you think ECB will be coming up with their expectations, and how would that shape up currency markets, as well as if there's anything else should we be expecting during the day today?
Hey, good morning. Yes, the very important meeting from ECB because it is the first time they'll be hiking the rate after 2014. So that's the expectation. Some in the market expect a 0.5% hike to get the rate to zero from minus 0.5, but more likely it's going to be 0.25 to be followed by 0.5% in September. But I think it's not just the rate hike by ECB. There's a lot of things are happening in Europe. There is this energy crisis. In fact, after Russia threatened to slap supply cuts to Europe, the European Union has told the member states to cut gas usage by 15% as an emergency step, because this is for a medium-term plan. Then there is this news that Nord Stream will resume the supply next week, but people remain skeptical. Germany, particularly, which is the most affected, remains very skeptical. Now, why I'm mentioning this is that ECB has to take into account the fallout of these events when they are making a rate decision. The other one which they have to keep in mind is the politics that is playing out in Italy. Volatility in Italian politics is not new. As per some data, there have been 131 governments in 161 years. That's that apart. Yesterday, Mario Draghi actually faced the vote of confidence. He won the vote of confidence, but it was without three important coalition partners taking part in the vote. Therefore, it's not a sign of stability because they have to push through certain reforms, financial reforms, etc. And it's not going to give any comfort. So we may well see Draghi finally stepping down from the PM post. And this political uncertainty also complicates the ECB's plans to hike rates, as well as it will be shaping up their new anti-fragmentation tool, especially regarding the conditions of the tools that need to be triggered. So then of course they will be also dealing with stoppage of any QE, and will they announce a plan for QT? These are the things. So a whole gamut of things to look forward to. And then, of course, for anybody who follow the ECB meetings very closely, the timing of the meeting announcement, rather the announcement of the decision itself, is going to be at 12:15 GMT, which is 5:45 PM IST, and Lagarde press conference will be at 12:45 GMT, which is 6:15 IST. So if you are following the decision and the press conference closely, please note down this new timing that the ECB has set. Now on to the other markets, equity markets, of course, they were kind of still in slum recovery mode, particularly on the Nasdaq, after some of the tech companies posted better numbers. Netflix leading the pack, even other Apple also recovered from their sell-off in the earlier sessions. Actually, somebody said, adding credence to the old adage that one rarely gets injured while falling out of a basement window. That's how it is. So the earnings have been so much downgraded that it cannot get worse. So that is how they have been viewing it. Of course, S&P 500 has now recovered well within the 20% of its peak. So you can say it is out of the bear territory, but the Nasdaq is still well below the 20% of the peak. So that is the one thing that people are watching, whether this is a bear market rally or it is a bullishness returning to the markets. But looking at inflation, interest rates, and earnings forecasts going forward, one has a doubt whether this is really a bull market phase. In fact, history says it's not a bull market, but rather a bear market rally. So at the same time, European shares also ended lower as uncertainty surrounded the gas supplies to the region and Italian Prime Minister's political situation also. Only data from US was the existing home sales, which again fell more than expected in June, extending a dismal run of the US housing data. UK June CPI was hotter than expected at 9.4% year on year from 9.1% in May. And the Bank of England expects UK CPI will hit 11%. My God, 11% into the year end. So Bank of England Bailey said yesterday that there will be a 0.5% hike in the rate, but even 0.75 from Bank of England is not totally ruled out. Not sure how much of it is helping the UK pound, because with all the increases so far, it has not really shown any real meaningful rally, because people still feel UK is also headed to recession, and the political uncertainty is also around until September. Now, one more news. I don't know how much it affects the market, but President Joe Biden's public approval rating has fallen to 36% this week. That's the lowest rating in his 19 months in the White House, as inflation takes its toll on the American life. And the opinion poll was taken on Tuesday. Another point of interest, perhaps for the patriotic Indians, is that Rishi Sunak and the Foreign Secretary Liz Truss will battle it out to become Britain's next prime minister after they won the final lawmaker vote. So it's now it's only a duel. Now there was as many as 8 contenders initially, and out of it now only these 2 are left. And Rishi Sunak obviously got more votes than his Liz Truss, and therefore market feels that he stands a very good chance of becoming the next UK Prime Minister. Of course, the euro fell back on the Italian political news, uncertainty over resumption of Nord Stream gas supply in full, as well as the ECB rate decision, anti-fragmentation tool, etc. Markets will remain choppy ahead of the decision. We had almost a 1% fall from the top, that's 1.0268 to 1.0157. Again, it's shown some recovery. As I said, it's going to be a bit of a nervous rate till the ECB. Even 1.03 being not tested after the recovery makes, to me, a clear bear trend sustaining. Only if we do break 1.0550, I think there is promise of a sustained recovery. As I said earlier, UK pound did not react to the high record CPI announced on the day. On just a few minutes back, we had the Bank of Japan decision. They maintained the policy as it is, and policy rate at minus 0.1%. GDP forecast, the inflation forecast, of course, has been revised upwards, and whether they will react going forward to the higher inflation is something that is not clear now, because right now they're maintaining the policy status quo. Just back to the rupee, of course, after hitting 80 mark, it's been biding time to decide the next move, even as the central bank offers were consistent for the last 2 days, just about the magical number. While oil bouncing higher again and key Fed decision due in a few days, as well as ECB decision today, market has been in a holding pattern. And in my view, gathering energy for a move to the next resistance at 80.70. Of course, this move is not going to come in a jiffy. It can take some effort, because RBA probably will be selling a lot more dollars. A report saying that, quoting a senior source saying that the central bank was prepared to sell another 100 billion to defend the rupee obviously did not have much impact on the markets. It can be viewed positively as well as negatively. If you actually come and sell, yes, there can be some positive impact. The fact that they are considering such things make people feel that it's probably central bank is getting more and more uncomfortable. So let's for the moment ignore that news. I think rupees trend has not changed, and uh, based on how ECB goes today and how risk sentiment performs in the coming days and of course the flows for the rupee. Just a small relief that the last 3 days we have seen three successive days of positive flows by FIS, but not very significant compared to about 35 billion that we have seen in the last 1 year. But maybe if you want to take some heart from it, it's there. Thank you.
Okay, JK, that was quite good and extensive. I must say the coverage that you have is quite brilliant. And guys, I really like the comment where he mentioned that rarely does one get injured by falling from the basement window, and that's what's happening with the earnings season right now. So we can see some bit of bullish action that's going on in the equity markets. I don't know whether we can expect it to continue or it's just a bullish run in a bear trend. So like JK mentioned, it's quite interesting to see how rupee is going to go as towards its next level of 80-70 that he mentioned. So right now the pair is seen to be taking a breather, and it's giving us time to assess where the risk lies for us. So hope you guys are managing the risk and assessing the risk for that matter really well. We'll come up with another round of updates tomorrow. Till then, thank you so much for listening.